So yeah, as David mentioned, myself and my colleague Aidan O'Hora supported the Southern Regional Assembly on the Fire Spal project through doing a bit of thinking about what could a renewable energy investment forum for the Southern region look like, and then engaging with stakeholders to get feedback and their views on, whether there was really a need for such a forum or whether there are enough forums already. And, really was there a need for this type of a public-private forum that would share knowledge and encourage collaboration, and ultimately, and this was very much something that we got back from the stakeholders, not be just a talking shop, but very much be there to drive action and support collaboration and projects to actually come through. So it was great being part of that and great seeing today happen, and we're looking forward to hearing the feedback from today to see whether people think this is something that they'd be interested in seeing continue. So we've spoken a lot already about the ambition, and we've spoken at like a global level, at an EU level, at an Irish level, and then about the policy and the policy measures that are being put in place nationally and regionally to really drive action on the ground right across renewable electricity, heat and transport. But ultimately, the question comes down to it, and David touched on this at the start, there's not enough public money in any country to deliver what we need to do to meet our climate action targets. So where's the money going to come from? And the answer to that is there's no new magic source of money. It's still the same sources of funding as there ever were. So public finances coming through in capital infrastructure budgets or in subsidies or grants, debt being provided by banks or by the capital markets or other finance providers, and then investors, whether public or private, and whether institutional investors or retail investors. So I suppose that makes us think, where, if it's still the same sort of finance, then where do we start talking about innovative finance mechanisms, and what do local authorities and regional governments have to do with any of this? And really that was what the Fire Spal project has been all about. It's been about investigating how can you boost renewable energy investment across the partner countries that were involved, really by sharing knowledge and case studies of different projects that have actually been implemented using innovative finance mechanisms in the partner countries. And so the Southern Regional Assembly was a partner, and there was local government or local energy agencies from 5 other countries. And really what came out of that was, and I suppose like any Interreg project, the purpose of this is to share, is to drive and develop policy development through sharing best practices from other countries. And so every country involved had to come up with 15 case studies from their region and put them forward as, listen, these are really good examples of what we've done here. That meant that there is this big case book of 90 case studies, kind of setting out different options and mechanisms. And really, when you look at them all, you can divide them into the themes that we've set out here on the right. So really, a lot of the projects that were, particularly these are the themes that are relevant from an Irish perspective. And a lot of the mechanisms that were discussed were things around, enabling citizen participation in either development-led, developer-led or community-led projects. And that's really about investment and ownership of projects. There were a number of projects around local authorities entering into innovative finance mechanisms like energy procurement contracts, or with ESCOs or energy efficiency funds, and looking at how that was all structured and how that worked out in the end. Or similarly, local authorities entering into power purchase agreements with renewable energy projects to really support the financing and development of additional renewable energy generation onto the grid. And another area was really, and this is nearly in the context of local authorities and their role as developing in economic development, but really making the links between these large corporates like Facebook and Amazon that are looking for renewable energy source power because they have set at their corporate level these really ambitious carbon neutral targets. And so they're looking to go to regions like anywhere in the world that will be able to provide them with local renewable energy source power. and the role of local authorities in kind of matchmaking or engaging and helping both sides. And corporate PPAs, I suppose, corporate power purchase agreements, they're a really important financing mechanism, because it's a way that projects can get developed outside of the renewable energy support scheme and auction scheme that Minister Ryan referred to earlier. And really it's large corporates that are putting forward the money that will ultimately support getting these projects built. And there were a number of other innovative projects and themes that came across, and really a lot of those were revolved around, and I think you can actually see a lot of those types of projects in the types of projects that Joe McGrath was just speaking through there earlier, but like local authorities getting involved to help de-risk projects that might be at an earlier stage of maturity in terms of technology development, or just an early stage of development generally. And the role of local authorities there in terms of de-risking projects to enable them to proceed across microgeneration or accessing national or EU supports, being a conduit there, and other innovative projects. And generally there was a link to local government involved in the case studies, or else to national government. There was even green bonds issued by Latvia to fund their renewable energy projects in one case. So today we're going to focus in just on one of those themes, because you could literally do a whole seminar, and I suppose that's the thinking behind the need for a renewable energy investment forum, that you could do whole seminars on every single one of these topics and more. But really today we're going to focus in on citizen participation or investment in renewable electricity projects specifically. So specifically actually wind and solar. So Mary, I'm not going to be talking today. I usually talk to Mary about residential retrofit finance, and I'm always happy to talk about that, but I'm not talking about that today. So I suppose just stepping back and thinking about, okay, how are wind and solar projects in Ireland financed at present? So why do we need any innovative finance here? There's two main sources of capital: equity and debt. Generally, you can get bank debt, or project finance debt it's called, for up to between 70 to 80% of the cost of a project. And then the balance is equity that's put in by the owners or developers of the project. The cost of debt on a renewable energy project has come down over the last number of years, I suppose in line with declining interest rates, but also in line with the fact that banks really understand renewable energy now and really understand how to finance these projects and are comfortable with wind or solar projections, etc. And it's also very much helped by the fact that there is the backing of the renewable energy support scheme for these projects. But debt is generally will come in, the last time I looked, at around 3% annual return. So the cost of the debt would be around 3% per annum, and the return you'd expect on an equity ownership of a project. So if you're a pension fund that's buying into a project, once it's been decommissioned and de-risked, you'd be talking about that you'd be expecting 6 to 7% annual return in that project. And basically these are so easy. There is nothing innovative about any of that. It probably was innovative 15 years ago. And even if you look at Poland put forward case studies as part of Firespal, and they still need EU funds to get some of their basic small wind and solar projects off the ground, because they're just not used to it. But in Ireland, it's very easy, excuse me, to raise money for a wind or solar project. That is not your issue, because these are really, really attractive investment opportunities, either for lenders or for, in particular, institutional investors. And when I talk about institutional investors, I mean big pools of capital, so big pension funds, big insurance companies looking to invest insurance premiums so that they will have money there to pay out to insurance holders, when it's needed, or really large asset managers. So, institutional investors, particularly pension funds, are really interested in these types of investments. And it's because they're long-term, they're really predictable, they're steady returns, they're cash yielding. And, if you think about it in a pension fund perspective, it's really nice to be earning 6 to 7% on capital when you need to pay, you need to pay pension beneficiaries in the future. These investments are not correlated with the stock market, and there's increasing demand for green investments globally, because investors realize that they need to, I suppose, manage their climate-related financial risk that they're increasingly aware of. So there's just a clamour for these types of investments, particularly in stable markets like Ireland. And like you'll hear it said time and again, there's a wall of money out there, whether it's debt or equity, wall of money out there. So the point I'm trying to make is there is no need for citizen investors in these projects. And yet what we're talking about in Firespall, and in the one country that's kind of, quite mature on this, ahead of us out of the group of partner countries, is Germany, and that was where a lot of the case studies that are relevant for us have come from. But there's a lot of focus there on innovative finance mechanisms to enable citizen investments in wind and solar projects. So why is this if you don't really need the money? So I suppose this goes back to, and it's well elaborated in the 2015 energy policy. National policy places citizens at the center of the future energy transition. This is what Minister Ryan was speaking about. Citizens, it's because we realize the energy system has to completely change. Governments and utilities are no longer going to be at the heart of it. Citizens and communities will increasingly be participants. And as a result of that, there are a number of actions set out in the white paper. One of them was to assess what are the best models for supporting community participation in some way, whether they're developing a project or whether they're investing in a project. What are the best policy measures to support community ownership? And in 2017, Ricardo issued a report, and it's a really good summary of all of the key issues and what they've done in other countries. And really, it concludes that the most efficient primary policy for supporting community ownership is the obligation for developers to offer the community, so developer-led projects, to offer the community an opportunity to invest in a project. And what they're talking about there is an obligatory approach that would be one of the requirements of accessing the Renewable Energy Support Scheme, so the auction scheme that's been referenced earlier. And there have been published communications that is being investigated about whether you can introduce that obligation through the Renewable Energy Support Scheme as part of some kind of a renewable energy participation scheme. But that's obligatory. In advance of that, it actually is possible to achieve some of these national policy objectives, the same policy objective, through some of these innovative finance mechanisms that we discussed in Firespall. And I suppose just to think about what are the benefits, they actually go beyond just being in line with stated national policy that citizens should be at the centre of everything. There's a wide-ranging literature and research. Celine McInerney down in UCC and has done a lot of research on this. That it's a really good way of galvanizing buy-in and acceptance for projects in a locality, with the view to getting more projects through the planning process, basically. And there's also evidence that by enabling citizens to invest and get a financial return, the benefits extend beyond just the financial returns. It starts people thinking, and it starts driving behavioral changes. And there's also evidence around that. And behavioral changes, like suddenly thinking about, oh, should I be driving an electric vehicle? Oh, maybe this climate change, maybe there are other things I can be doing. And I think there's a key piece here about changing the narrative on climate from challenge to opportunity. We talk, we hear all about the time about what we can no longer do or no longer eat or no longer, do on our land, or whatever it is, and how everything's going to cost us more because of carbon tax. And really, there's an opportunity here to flip that narrative to, oh, you mean I can invest my money and I can get a slightly, a better return than I would by putting my money on deposit with the bank. So I think there's no better way of engaging people than I think through offering investment opportunities, provided they're appropriately structured, etc. And I suppose all of this, the benefits of enabling citizen investments, is with a view to meeting the national 2030 targets and beyond that we've spoken about. And what are the role of local authorities in this? And I think Joe McGrath put it, perfectly by referring to the climate action plan and the pivotal role that local authorities play as that trusted leader, public sector leader, and showing their leadership, and also in mobilizing action in their communities and their localities. And I suppose local authorities can do this by raising awareness of their own decarbonisation investments, showing leadership that way, ensuring the planning system is fit for purpose, of course, but also they can be those honest brokers that can foster collaborations, that can support public-private partnerships, to get projects that wouldn't otherwise have gotten off the ground, and as project partners in them, whether it's developers or financiers, and also through sharing the types of solutions and types of innovative financing mechanisms that we're seeing through best practice in the EU, and that we see as part of the Firespall project. And that's basically an introduction into the case studies that you're going to hear from next from Elias and from Greg Allen of Community Power. But I will just mention one other project. Sorry, one other recent enough development that's quite interesting, and this is in the UK, so close to home. And basically, it's an opportunity for citizens to invest in their local authorities. And so basically, the local authorities go out to citizens and they say, we're raising funds to fund green projects, whether it's rooftop solar or solar farms. And you give us your money for 5 years and we'll give you a fairly low rate of return, 1.2%. But the low rate of return reflects the fact that these are very low risk investments, because actually your return doesn't depend on whether the project is successful or not. You're lending to the local authority, and so it's on the strength of that local authority rather than on the project dynamics at all. And there is some opportunity, some liquidity, so some opportunity to get your money back. If you need your money back urgently within that 5-year period, you can sell your investment on a crowdfunding platform that they are using. And really, this is exactly the objective we're talking about. It's about connecting citizens with local green projects and allowing them to make a financial return. And at the same time, it actually is quite win-win, because you're also creating long-term income streams for reduced energy bills for the local authorities. And this website, it is a crowdfunding platform. I'm not affiliated with it in any way, but they are quite interesting. And what they talk about is interesting, because we heard Mary talking earlier about energy democracy. They talk about democratic finance and about enabling that and really linking people with where the money is being used. It is a crowdfunding platform though, and you do need to be careful with all of these things. So that's why it's quite nice that it's a really low risk product that's on the platform, because it's, with anything like that, consumer protection is there for a reason, financial regulation is there for a reason. What you really don't want is for someone to invest in renewables, or a large group of citizens to invest in renewables and then lose all their money because they don't have any diversification of risk, etc., because that could totally damage the narrative on climate change. So with that, I'm going to hand over to Elias, who's the next speaker. But just to highlight that there is a Firespall website where all the case studies are up there, and there are lots of case studies on all of these other interesting themes, and we're only just touching briefly enough today on citizen participation. So with